It's buybacks as we enter the last 2 weeks of September. What does that mean for the markets and your money? That's coming up on 3 Minutes on Markets and Money. On Friday, the market sold off on the back of a warning from Federal Express suggesting that the economy is slowing down a whole lot more than a lot of people expected. Importantly, the market did break below that rising bullish trend line that we've talked about here over the last couple of weeks as being kind of an important level of support. But the market was able to hold on to the support line going back to the May-June lows. Now, importantly, this morning, futures are pointing lower as we get some additional selling pressure. Again, the sell-off last week was certainly very vicious, and of course, that's got a lot of investors kind of panicking here. We're going to see the market open below the support line this morning. Now, if we do wind up closing below this support line, this is going to bring in the support levels going back to around 3,700. So there is certainly some downside risk here currently in the markets, and you don't want to dismiss that. But markets are oversold short term. And we had a lot of selling last week, just day after day of kind of selling. So again, a bit of a rally here won't be surprising, particularly after Friday, which was a very large options expiration day. So a lot of those positions got to be put back on the books. So again, a bit of a rally today, tomorrow, Wednesday, won't be a surprise at all. Be sure and use that rally here as an opportunity to raise a bit of cash, kind of rebalance portfolios a bit. Again, kind of that same measure. Every time we have these sell-offs, we talk about using rallies for a potential rebalancing of risk. This has been a very tough market this year, kind of a death by 1,000 cuts type market, as just no matter what you try to do, just doesn't really seem to work out well. That type of market leads to a lot of investor mistakes over time. So be careful making emotionally driven decisions and try to use rallies as opportunities to reduce that overall exposure so we can weather whatever this market's going to be here over the next couple of months. Now, the good news is, of course, we're moving into the seasonally strong period of the year, which is October, November, December. Again, no guarantee markets will improve, but we're also going to move into earnings season at the beginning of October. If earnings come in a little bit better than expected, we could see a bit of a rally there. Over the next 2 weeks, though, we do have a blackout window for share buyback. So that's going to remove an artificial buyer from the markets through the end of the month. So again, use rallies to rebalance risk here until we get into October and get a bit better handle on where we are, both market-wise as well as economically, and we'll have the Fed behind us. I'm Lance Roberts for 3 Minutes on Markets and Money. See you tomorrow.